Well, a $55 billion deal in the cable industry. Charter Communications struck a cash and stock deal for Time Warner Cable. The acquisition would make the cable company now the nation's second biggest after Comcast, which recently terminated its deal to buy Time Warner Cable, and Comcast is the parent of NBR's producer, CNBC. Shares of Time Warner Cable and Charter both higher in trading today. Julia Borston has more.
Charter's acquisition of Time Warner Cable will build a powerhouse. Along with its purchase of Bright House Networks, the company would have nearly 24 million customers, second only to Comcast. This just a month after Comcast pulled out of its planned acquisition of Time Warner Cable in the face of pushback from the FCC.
What the FCC is seeking, I think, is being developed by this transaction. It's not just about doing no harm, it's about bringing better services to the country and to customers and expanding the footprint upon which those services are delivered.
Rutledge is pursuing this deal not just because scale should yield cost savings, but more important, he says the larger company will be able to sell better products and grow margins by reducing churn or the rate of customer loss. But some investors have raised concerns that Charter could be overpaying.
The idea that his churn rate, which is a huge number that we all look at when we invest in the debt and the equity of these companies, is somehow going to go down because of paying 9 times multiple or getting scale. I'm highly skeptical.
Growing Charter's scale would be especially beneficial when it comes to broadband as consumers shift away from traditional linear TV in favor of streaming video, which raises the risk of cord cutting.
There are new over-the-top providers like Netflix and Hulu, and now HBO, which was a traditional cable provider, moving into a different space, into broadband. And it's become an essential part of a lot of consumers' lives, and doing that well and doing it fairly and efficiently is a public interest. And so, the nature of what our business is has changed.
Rutledge says he wants to give consumers more choice, which could include a direct-to-consumer broadband video service, an alternative to cable TV. Now we'll see whether Charter's interest in offering these new choices seems beneficial for consumers and wins the FCC's approval. For Nightly Business Report, I'm Julia Borston in Los Angeles.